Joining us for a further look on what's playing itself out in the market scene is Kunze from Sanlam Private Wealth. Nick, thank you so much for your time today.
Oh, good afternoon.
All right, let's take a look maybe at what we're seeing on the boards here. Upbeat in Europe, but not so much here at home. Nick, I'm keen to find out what markets are trying to make sense of today.
Yeah, the South African underperformance, as you pointed out on the all share, continuing. Last week it was the other way around. Last week the US market hit all-time highs while Europe was down. Today it's emerging markets a little bit weaker, but this firmer dollar I think is playing into this, and also some quite disappointing news flow out of China this morning, and China being South Africa's biggest trading partner, we're a little bit weaker today. So we've had a very soggy start to 2024 on the all share.
I'm actually keen to get your thoughts on this firmer dollar that we're seeing here. Have we heard or seen of a more hawkish Fed here? I'm just trying to figure out what is driving the strength of this dollar at this point.
So, I think the Fed have been reasonably hawkish. I think the markets are the ones that have been a little bit too forward-looking and maybe a little bit of too much optimism. After the last time the Fed met in December, and everyone's talking about that Powell sort of flip-flop or the pivot, with the dot plots looking at 3 rate cuts this year, the market was already pricing in 6 or 7, which I think is a little bit way too ahead. And then, the last couple of weeks, you've had a little bit of stronger data coming out, jobless numbers, the UK, for example, inflation still showing that it was a little bit sticky. So I think there's been a ratcheting back in when we think rate cuts will be. And of course, at Davos last week as well, Madame Lagarde from the ECB indicating that the ECB will only have first rate cuts maybe in the summertime, which is about 3 months after the market was looking for. So I think a little bit of a reality setting in, and higher rates are probably going to be here for longer than the market's looking for.
Staying with the US, I'm also keen to get your thoughts on the earnings season we're seeing starting here. Netflix, I think, out this week, Tesla as well. What are we expecting, Nick, to come out of these companies, specifically Tesla? It's been a bit of an uneven picture there, hasn't it?
Yeah, we started off earnings season a week or so ago. The banks traditionally always kick it off, and they're okay. But JP Morgan record profits, Bank of America good results. In general, the financials were okay. And as you said, this week is the big one. We've got Tesla, we've got I think a couple of other big IT companies as well reporting. So Tesla has been a relative lagger, believe it or not. Relative to something like a Nvidia, which has been hitting new all-time highs every time I look at the screen. Tesla's been a little bit of a lagger. They've had to cut a lot of costs. They had to slash down their sales of Tesla vehicles and a little bit of a price war, so that's knocked their margins quite a bit. So I wouldn't be surprised if they come out a little bit better, because the stock has been a relative lagger. But so big numbers are to set the tone for the next couple of weeks.
I'm actually keen to get your thoughts on that. You mentioned the issue of Nvidia, Nick. Have the Magnificent Seven priced themselves into a bit of a bubble that could, be ex-growth at this point? Or are we anticipating them to still be driving up that NASDAQ and really be boosting US financial markets?
There's no doubt about it. Some of these tech shares are probably pricey, to say the least, and extreme valuations. It's 60 times earnings for Nvidia. It's difficult to quantify, how much further it's got. But saying that, the quarter in, quarter out, they tend to beat. The problem we've got is from a valuation as a global point of view. It's very uneven. It's a very concentrated rally, and in fact, to your point, Russell 2000, which is 2,000 of the smaller cap shares in America, possibly more representation of US Inc., so to speak, they're still down 20% from its highs, where the NASDAQ's at an all-time high. So real contradiction there, and it's difficult to see how long this continues. But for now, the market continues to take the good news in its stride.
Another tricky one that we're trying to watch, Nick, and I think it's all because we're trying to figure out where our inflation picture will go this year, is the price of oil. I'm keen to get your thoughts on this. It's just so volatile, it's difficult to pin, but there's various factors playing in here. What we're seeing, of course, happening in the Middle East, but also demand a little bit more depressed than what markets anticipated.
Yeah, this is quite a tricky one, because obviously the most traded commodity in the world, and a huge interest for us here in South Africa as well. We import all of our energy needs at the moment. So yeah, the price of oil makes a huge impact to all of us, and businesses especially. Oil sitting currently where it is now, difficult to see where it goes. OPEC have been trying to keep the price elevated. They've had production cuts, as we know. But on the other side, you're trying to balance it with an economy that is slowing. And we've had, as I said earlier, some dire results out of China. The second biggest economy is sort of spluttering along. So that's also keeping a little bit of oil suppressed. But on the back of that, for the bulls out there, don't forget the strategic oil reserves out of America is sort of hovering around multi-decade lows. They're going to need to top that up at some point. That should offer a little bit of help to the price. And then one or two positive, well, I think we've got US GDP or certainly some G7 countries reporting this week on the GDP. Decent result out of that will give a bit of a bid to oil. So I think oil's actually got a little bit of upside from here.
I mean, speaking about that, and these G7 countries, Nick, I'm also keen to get your thoughts on the overall conversation around a global recession here. Are we still talking about it? Do markets have this on their radar, for 2024? We're just trying to gauge whether we know growth won't be as buoyant as we'd like, but, is a recession on the cards?
Well, people have been calling recession for months or year or so, and it just hasn't happened. In my experience, recessions tend to come when people don't talk about them, not when we're all talking about it. So you take that point. But on the other side of it, it's a very divided world. So the numbers that have been coming out of Europe, you look at the PMIs that are coming out of France, Germany, they clearly probably already in recession. Definitely. Whereas the US, no. China, we're not sure. Or possibly, teetering on the verge of a slowdown there if you look at the PMIs as well. So a very fragmented world. Is a recession coming? I definitely think a slowdown will come at some point this year. But trying to call that has been a bit of a mug's game when it actually comes.
And before we move on, Nick, we have our own MPC this week. Are you anticipating a hold?
Definitely. I think our Mr. Kanyagi and his team are notoriously hawkish. I don't think they want to sort of preempt anything. They tend to like to get a little bit ahead of the Fed. Fed are not cutting yet. They won't cut yet as well. But I think we could all be a little bit confident after those credit card statements for all of us in South Africa after December that we have seen the peak in rate rises, certainly from a South African perspective. So no rate cut, but there's definitely, I think we've seen the peak in rates from a South African point of view.
And with that said, Nick, keen to get your stock pick for today. Which counter are you betting on?
So we've done it a few times before. We've mentioned Glencore, some of the diversified miners, but Glencore in particular with its copper exposure. We've seen copper, one of the few counters outside of iron ore that also hasn't sold off for the rest of the PGM basket and some of the other metals. Still big demand on alternative energy, electric vehicles, the usage of that copper and more sort of reports coming out that copper is in a deficit for this year and possibly 2025 as well. So Glencore, one of the bigger players, over 20% of that portfolio is copper. So we're leaning more on that. And it's just, I see this morning under 100 Rand a share. It's a nice entry point for those of you who want that exposure.
Fantastic, Nick. A pleasure speaking to you today. Thank you so much for your time. That was Nick Kunze. He's from Sanlam Private Wealth.